Or as we navigate the evolving landscape of Malaysia's economy, the implications of Belanjawan 2025 are at the forefront of our minds. The budget not only outlines the government's financial priorities, but also sets the tone for various sectors, including the insurance and Takaful industries. Understanding these changes and their potential impact is crucial for stakeholders and the public alike. To shed light on these developments, we are honored to have with us Chris Eng, the Chief Strategy Officer of Etiqa. I want to say thank you very much, Chris, for joining me. Firstly, we have a touch on budget 2025, the first week after the presentation last week, focusing on fiscal sustainability and the reduction of subsidies for higher income groups. Do you foresee any significant impact on the demand for insurance and Takaful products among the middle and even the lower income groups?
Morning, Nina, and thanks for having me on the show today. I think the government has been quite pragmatic with its budget for 2025. And with regards to the middle to lower income groups, we're very pleased to see a couple of factors. For example, the rising of the minimum wage. There's increased handouts to the lower income groups. I think most importantly is the maintenance of the subsidies for petrol for 85% of the population. And this should help cushion any potential change in demand for insurance products. I think particularly for general insurance products like motor and travel, these will continue to be there. We also see continued demand for smaller ticket sizes of life insurance and family Takaful products. So we're very pleased with what the budget is offering to the middle and lower income groups.
And one of the fiscal policy, we can see the government has implemented a 2% tax on dividend income above 100,000 ringgit. Chris, how might this affect investment-linked insurance and even Takaful products? And could it shift investor behavior in the long term?
When we look at what was announced, I think there are a few different ways to interpret it. But based on my own interpretation, which is 2% of tax on dividend income exceeding 100,000 ringgit, when we look at the impact, let's say, for example, you have a portfolio of 3 million ringgit on stocks that yield 5% dividend yield, the tax is actually very small. That's only about 1,000 ringgit on a portfolio of 3 million. So it's a very small component. We don't really see any impact to terms of investment-linked products, those that are linked to insurance policies. If anything, that's a very small dip in sentiment, particularly on direct equities. But when it comes to investment-linked policies, we don't see any major demand. Of course, we'll have to wait to see further details of examples of how this 2% tax is implemented.
Probably, as you mentioned, this is quite early stage to evaluate the impact, and probably there's a minor impact or minor adjustment moving forward. With the minimum wage rising to 1,700 ringgit and the mandatory EPF contributions for foreign workers, how do you anticipate this will affect the demand for life and health insurance among both local and even foreign workers?
Well, at the moment, most local insurers, they don't offer insurance coverage to foreign workers. So the focus will be still more on the local side of things. We do see a lot of benefit coming from the raising of the minimum wage. It helps to lift the overall income level of the country. And of course, with mandatory EPF contribution, broadening the asset base of EPF, that will also provide greater returns. Specifically, with regards to how our local Malaysians can leverage on their EPF savings for insurance products, we are happy, of course, to be one of the partners with the EPF on their iLindung insurance and Takaful scheme. And what we really want to see is more Malaysians avail themselves to their EPF savings, because this doesn't affect their take-home, doesn't affect their disposable income. It is what they already have saved in the EPF and gets them better protection through that. So we're very happy to be working with the EPF on the iLindung scheme.
And we can see this probably initiative has bring a safer and more, we can see, security for the community. And budget 2025 includes significant allocations for infrastructure development, also particularly in small and medium-sized projects and border town developments. How do you think the insurance industry, particularly Etiqa, can benefit from these opportunities?
Well, we're in a fairly unique position because we have both life and general insurance in Malaysia. And we've been active in offering insurance protection to various construction projects across the country. In fact, in some of the major infrastructure projects, we are one of the leading insurers or one of the leading Takaful providers. In the government, we noticed that there hadn't been announced any new mega projects, but the existing important infrastructure projects that will benefit the rakyat have been continued. And also that broadening, as you mentioned, towards the border towns. So we as an insurer, providing coverage in the form of whether it's contractors, all risks, or workmen compensation, we think that we will work together with these contractors, with the government in providing cover and ensure that all these infrastructure projects will continue to benefit the rakyat.
And as you mentioned, there are no new mega announcement project in the future, but we can see the ongoing project is still being proceeded and continue with much stronger efforts. And EV adoption, not to forget as well, has gained further support in this budget with incentive for EV purchases and infrastructure. How is this insurance industry and specifically Etiqa position itself to capitalize on growing popularity of electric vehicles, EV, Mr. Chris?
Yeah, we're happy to say that we are one of the leading EV insurers and Takaful providers in Malaysia. We have about 20% market share at this point of time. And again, one of the very interesting points coming out from the government during the Belanjawan was the reminder that we expect to see locally made EVs coming in 2025. I think that shifts the understanding or perception of what is an EV. Right now, most people see an EV as a luxury product only for the rich because of the pricing points of the EVs in the market now. But with the launch of a locally made EV, and we expect that pricing point to be much lower and more affordable, then people will come to understand that EVs are not just for the higher income, but actually they are for all. And we at Etiqa, being a local champion of the insurance and Takaful space, we're happy to support and work together with the EV manufacturers and the government to promote sustainability in Malaysia. It's in line with our commitment to be the only Malaysian insurer that's a signatory of the UN Principles of Sustainable Insurance.
Chris, a lot we have touched since the early of our discussion we can say that dividend tax, minimum wages, and even the foreign worker EPF, and also want to add on the tax relief with the expansion of tax relief for medical expenses, which now includes co-payment policies, could encourage more individuals to purchase health insurance. How do you expect this will impact the demand for health and even medical Takaful products?
Well, I think it's a move in the right direction to introduce the co-payment facility. At the end of the day, is to find a win-win position for all, meaning for the insurers, for the private healthcare providers, as well as for those who have bought a medical policy. So we do feel that the messaging around exactly what is a co-pay and how it will not have a significant impact in the short term can be better improved. But we do see this as a longer-term improvement for the whole industry. So continued demand and evolution of medical insurance and Takaful, I think this is a given. In speaking to some healthcare providers, 10 years ago, they were looking at only 30% of their customers being insured, the rest being cash payment. And now that percentage is totally shifted. It's 70% of their customers being insured, 30% paying cash. So this is a norm, this is a trend that we do see continue, and it's good to see the regulators take a lead on this. We just hope that the communication on what exactly is co-payment can be strengthened to ensure the continued relief and understanding by the Malaysian public. But demand will definitely continue to grow.
Correct. If demand continues to grow, it's very critical for us to be focused, especially on the communication and transparency of this execution. And also want to add something about carbon tax. This is basically relatively new for Malaysia. And with Malaysia pursuing a carbon tax by 2026 and increased funding for the National Energy Transition Roadmap and ETR, how does Etiqa plan to adapt its insurance offerings to meet the needs of businesses transitioning to low carbon technologies?
Thanks for the question, Nina. I mean, when we look at our position in the market, again, we're a leading commercial insurer in Malaysia, And we work with many of the large Malaysian corporates, those who may be deemed to have a larger carbon footprint, such as Tenaga, Sarawak Energy, Malaysian Airlines, Petronas. And we're pleased to see that just as it is with Etiqa, all of them have laid out a sustainability roadmap on how they want to move forward over the next 20, 30 years and bring down their carbon footprint as well. And we want to encourage them and work together with them in managing down this carbon footprint. So some of the products we have offered is something called a solar energy shortfall insurance, and it's Takaful counterpart. And what really that does is it encourages the proliferation of solar panels in Malaysia. And if there's a shortfall in electricity production, then the insurer pays the difference in what was supposed to be generated. So in this way, we hope to work with these large corporates to move together with them on their journey and help to manage down that carbon footprint, both for them as well as for Malaysia as a whole.